Onto your markets now. Asian markets were generally on a weaker wicket today. This as investors worry that a global recession may be unavoidable as key central banks continue to tackle the high inflation environment with higher interest rates. Over in Japan, the Nikkei share average declined by 1.54%. Hong Kong shares were also down, with the Hang Seng Index falling by 0.62%. Mainland China bucked the trend, however, with the Shanghai Composite Index closing up 1.1%. Over in the United States, markets ended yesterday's session on a low ebb. This as market participants digested news that the U.S. economy contracted by 1.6% in the first quarter, as well as disappointing consumer confidence figures, which also whacked confidence. The Dow Jones Industrial Average ended up 0.27%. The S&P 500 declined by 0.07%, while the Nasdaq Composite Index also closed down by 0.03%. The local market has been languishing in the red today. Precious commodities like gold and silver are on a downer. The rand is trading weaker. Well, it's trading a bit better against the US dollar at 16 rand 29, 19.74 against the British pound, and 16 rand 96 to the euro. The JSE is red across the board. The all-share index has shed 1.7%, now standing at around 66,563 index points. The industrial 25 index is more than 0.5% down. Financials are down by 2.5%. The top 10 resources index has also declined by 1.7%, and the precious metals and mining index is 0.9% in the red. Gold is trading at around $1,810 and platinum at $903 per ounce, while the price of Brent crude oil is now hovering around $115 a barrel. All right, to get more on what's happening on the markets, I'm joined by Carmen Mpelwane. She's a portfolio manager at Absa Asset Management. Thank you very much, Carmen, for joining us. Markets don't seem to have bounced back from their bottom just yet. There seems to be so much volatility. What's your take on things?
Yes, unfortunately, JSE has given back most of its gains that it had earned for the week. And a lot of that, I think, is driven by negative sentiment. As you've mentioned, concern around a recession and the impact thereof. And then obviously following on Jerome Powell's comments around higher inflation for longer and the expected impact of that on the global economy. So we've seen on the JSE a big struggle, unfortunately, and doesn't look to be that we'll see a turnaround today.
Just touching on what you mentioned about the US Fed Chair Jerome Powell, apparently he had said that he would rather have the burden of a recession rather than the burden of higher prices. What do you understand by that, and do you agree with that sentiment?
Yeah, I think in practical terms, if we do go into a recession, the central bank has the ability to give an indication to the market through pulling back on interest rates. Currently, because of high inflation, we are in an increasing interest rate environment. And what that does is there's a read-through and a spiral when you are in high inflationary environment where as prices go up and there's no ability to rein them in, the central banks have little power in terms of looking at, for example, wage increases, etc. So the only means is by increasing the interest rate. And if you don't do that fast enough, you won't catch up with that rising inflation environment. So effectively, it's just a downward spiral for the central banks, whereas if it's a recession, it's a one-off hit. We feel the pain, but it's not as sort of drawn out as it is for an inflationary environment.
Yeah, this is more an economics question than a markets one. But of course, we're hearing that Reserve Bank Governor Lesetja Kganyago says that 50 basis points, another one, is not really off the cards just yet. Now, if they do decide to go down that route, it means South Africans are really going to have a hard time because we've got so many increases and then, of course, a higher cost to service your debt.
Yeah, unfortunately, on the back of that inflation number that we had recently, which has now pushed South African inflation out of the SABC's target range of 3 to 6%. So that's definitely been a tailwind for this statement that's been made by our SABC governor. And I think something that's not unexpected, a lot of investors are looking to price in a 50 bips hike again. But I think largely the expectation is that we are looking for 25 bips going forward. Consumers going to see a lot of pain. But as I've mentioned, if in a high inflation environment, it becomes really, really difficult for the central bank to try to rein in, and the pain is felt across the spectrum. Unfortunately, also, we thought that the consumer would be largely supported by increased savings rate over the pandemic, but a lot of that is now going to be meted out to fuel costs, rising fuel costs, and also rising food costs. And that also in an environment where we have high unemployment. So, yeah, all these negatives, unfortunately, does not bode well.
Yeah, so we've heard as well in the market, Sibanye-Stillwater putting out an advisory that it's going to be buying up to 80% of a Finnish mining and battery chemical company. Is this positive for the PGM producer? And is there any evidence of reaction to this in terms of its stock price?
Yeah, I think it's come on a day where the market generally is down. So Sibanye is also down about 2%. Having said that, what this transaction does do, keeping in mind they already hold 30% of this company, so they are exercising an option and currently negotiations to increase to the 80%. But what this does do is allow them to diversify their basket of commodities away from their reliance on PGMs and getting into lithium-ion battery space. It'll probably be the first all-encompassed or all-inclusive lithium producer in Europe, and puts them in a prime position in terms of being close to the markets for the manufacturers of electric vehicles, which is where lithium-ion batteries are used. So I think it does speak into their change in strategy, and we'll see what comes from it.
In terms of Sibanye-Stillwater, is it a buy, hold or sell?
It's pulled back quite significantly, and I think that's largely because there's been concern around commodities and the high commodity prices. But at these levels, looking very, very interesting as an entry point once again for investment.
Excellent. Thank you very much, Carmen, for your insights. As always, Carmen Mpelwane, she's a portfolio manager at Absa Asset Management.